Well, hello everyone. Welcome to the Trading with Ashley show. This is a very important video because when things are riding high like they are right now, it's easy to just look at everything and say the stock market's great, everything's easy, and it'll go up forever. But I say there's always a big but in the room. But you have to prepare in times like this when things are going good. So today's going to be really important because for all of my viewers, I want you to enjoy the stock market. I don't want you to be stressed out and constantly panicking about what's around the corner. I want you to be prepared. So here is how I'm going to prepare you today. So the first thing we're going to talk about is when might this happen? When might we get a more dramatic pullback? Well, let me at least remind all of you, I'm sure none of you have forgotten, but let me remind you, we have already had a dramatic pullback this year in 2025, and that happened at the beginning of the year. Now, what we're seeing now is great because it's been that V-shaped recovery, but the stock market doesn't just go up or it doesn't just go down. Typically, it'll trade sideways or we'll have some little bit of a correction and then off we go again. So we're going to look at when this may happen. I'm going to help give you an indicator that I like to use to unpack all of that. Then we are going to look at how bad will it get? What are the levels that if you have been keeping your eyes on certain stocks or certain leaps that you want to purchase, how bad will it get? When will you know that it's time to actually deploy that cash you've been holding for some of these longer term plays? And then most importantly, what can you do to prepare for it? Otherwise, just hoping and praying because we know that's not a real strategy. And so let's go through some of the different things that I do to prepare for the eventual pullback. And you can actually take advantage of this now when your portfolio is all green and things are riding high. Now, this is a common question I get. How do you hedge your portfolio? What is your preferred hedge? There are so many ways to hedge a portfolio, but it's so hard to predict. So you might be buying put options to hedge your portfolio only to see your stock going up, 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 and then you're eroding some of that profit. So my preferred hedge is now and always has been cash, because the market has a tendency to want to go up over time. And if you are in quality stocks, those stocks will more than likely go up over time as well. So you don't want to work against yourself, but you do want to be able to get these great quality stocks or ETFs at a low price. So cashing up is critical, especially at moments like this. And so I'd put together a whole video about how to scrub your portfolio, how to look at all your plays and then cash up. I'm going to leave that video at the end so that you have a template that you can follow that will help you. Now, you may be wondering, how much cash do I need? Well, when the VIX is low and things are riding high, that's when I like to create most of the cash that I will eventually use. So now would be a good time to start to put that cash aside. I personally prefer 30% of my portfolio in cash when things are riding high so that I can deploy that cash when the VIX spikes and then things get worse. And so when things are at their worst, like they were April 7th, at that point, I had pulled my cash from the sidelines and I deployed it. And now I'm really glad I did. And so this is the moment in time when you start cashing up again, getting ready for that next pull down that eventually will come. Another thing you can do, and this is something that we just did today in my community, you can sell puts on the VIX. So how do you do that? I like to do that with either VXX or UVXY. Those are two ETFs that you can actually use to sell puts on. I also went ahead and purchased some VXX while it is low because when volatility spikes and nerves enter the market, then this particular ETF, it will rise. And then at least I can have something green in my portfolio on days that everything else might show red. The other thing I like to do when I'm opening trades, if I anticipate that we may see a pullback, let's say it happens in September, maybe October timeframe, then when I sell puts, what I'll do is I'll leapfrog those particular months and I'll go out to a time when I am more confident in the market heading up, let's say November and December. So if I want to sell puts and what I'm selling puts on could be vulnerable to more of a correction And those would be some of your tech-heavy stocks. If you are trading stocks that don't have a strong balance sheet right now and they're more speculative in nature, those would fit in this category. For those stocks, you may consider just bypassing the next couple of months and going out further for two reasons. One, it will allow you to go much lower and still get really good premium. So it's going to take less capital to put those trades on. But the other thing is you do lessen your risk of early assignment if there's a big drop. Also, you want to consider if there is a big drop, then you want buyers to step in when things are getting a little bit more green, and you give yourself more time for that thesis to play out if you go a little bit further out on your speculative plays. Now what I want to do, I want to go into the computer and I want to show you some trades where we had sold puts in the community and we were actually put the shares. And now those same shares, well, they have recovered and they are going significantly higher, which is allowing us to sell in the money calls for the eventual call away, maybe as soon as this Friday. And the reason I want to show you this is I don't want you to be afraid of assignment if it's a quality stock and you are getting a fair price. I like to envision that I'm going to buy a car. When you go and buy a car, you do your homework, you do your research, and you always make sure that you know what a fair price is. You may not get the best price of everyone that shopped for that vehicle, but as long as you get a fair price, you can leave keys in hand and feel like you are driving something that has some value to it. Well, it's no different than when you go shopping for stocks. Now, how do you know if you're getting a fair price? Well, I've got plenty of videos that go over all of the indicators so that you can make sure you get the best possible price on your stock. And if you get a fair price, then I just hold on to it and I wait. Of course, it's important that if you're living off these funds, that you do have cash to the side so you don't have to get out of your positions that may be losing at any given time to pay for the light bill. It's important that you do keep cash to the side for market corrections so that you can pull off of that to buy groceries, pay the light bill, and such. That way you can take the cash that you have been saving to deploy and then you rinse and repeat because you get in low and then you sell high. It's a very predictable cycle, and with the tools that I've shown you today, you should be more prepared to know when it might happen, how bad it might get, and now you know what to do about it. As far as the when will this happen? When will we see some type of correction? I like to go with the fear and greed index. Currently, as we sit today, we're back in greed. We had gone down to neutral and we were actually flirting with extreme greed just a few weeks ago. So now that we've gone down to neutral, we're back in greed. I like to start to consider cashing up at this point. Now, once we get to 75, which is right there at extreme greed, and definitely when we get to 80, that's when I want to make sure I have the maximum cash available, that 30% to use for when we pull back to fear. So watch this number down here, this 63. Anytime we're close to 75 or 80, you want to have all your cash ready to go. And this would be the point to start to consider cashing up. Now on to discuss the how bad will it get. Well, remember, we have had a dramatic correction already, but I wanted to bring your attention to the NASDAQ, the QQQ, because this is where a lot of the stocks that I trade options on, this is where they live. So I like to watch this particular indicator. And I want to bring your attention right here to the 50-day moving average. Currently, it's at 550, but I will have you know, just a few weeks ago, it was at 540. So because this is a moving average, it continues to rise up over time. But when we do get an eventual pullback, whether that's in September or October, whenever it happens, you may want to watch and see right when it gets close to this purple line, this 50-day moving average. That might be a good time to go ahead and start deploying some of that cash. You know, I love the Q's leaps, and I have several of them. My plan is to finalize my position over the next couple of years when we actually get back to this 50-day moving average. And again, if we keep pushing harder, this moving average will continue to rise. But watch on red days, watch how close we get. We got really close right here on this particular red day, but we didn't quite make it. So on we go up, but eventually something will pull us back. And if you want to do shorter term plays, when we get to the 20-day moving average, that may be a time to do some skips instead of leaps so that you can cash those in when they eventually pop back up. You know, as you know from watching the market. It doesn't go straight down. It doesn't go straight up. It likes to test different levels and then on it goes again, or break different levels and then find support at various levels. So if you just watch these indicators, you can usually get a really good indication of when it's time to actually buy again. Now, I had shared with all of you that I have a system I use, and when I am assigned shares, I sort my tracking sheet so that I can better determine when it is time to go ahead and sell some calls. So this is what I was looking at today, and let me show you a few that stand out to me. So we were assigned Oracle right here at $170 a share. This was a sold put. That assignment happened back in December 20th of 2024. Well, here we sit today, and it is now appreciated by $83. So that's mine to keep on the call away. So I went ahead and sold a call against Oracle. That's why it's red. When I have assignments that I sell a call on, it turns red like this so that I know I've got a call sold on this. Now, when these are called away, that's going to be a very handsome return. But had I not accepted assignment, had I just rolled this out, then I wouldn't have enjoyed the appreciation all the way from 170 up to 253 where we sit right now. Let's look right here at Amazon. I was assigned at the $200 strike. This was back when everything started getting really bad here on March the 21st. I took assignment, wasn't afraid of it. Amazon's a great company. And here we sit now. It's appreciated by almost $22 a share. And so this one will be significant when it's called away, possibly this Friday, because I did sell a call for the call away. Now, if I don't get a call away, I still get to keep the premium that I received. And so it's allowing me to make a little bit more money while we wait. And I'll show you one more that was really a good assignment. If you look right here at Robinhood, I was assigned at $45. This took place again back in March when things started getting really bad. And then now, wow, I'm glad I was assigned because look, now I'm enjoying $69 a share in stock appreciation. I mean, some of these trades could be life-changing for individuals depending on how many contracts that they did. These are just all representing one contract, but you can see the power of assignment. Do you realize how long it would take to make enough premium to get $69 a share? And this has just taken place since March. So assignment can be really good if you're assigned at a fair price and you allow it to pop back up before you start selling calls. I hope you found this helpful. Remember, if you're with me, Trading with Ashley, there is no trader left behind. Now, I promised you a video that will help you clean up your portfolio, get rid of the dead weight, and create that beautiful cash for when you need it. You can watch that video right here.